And since we talk so much about the cost of living and inflation on this channel, one of my viewers, Bill, suggested that I talk a little bit about how we got to this situation, because really inflation was never an issue until the Federal Reserve was created back in 1913. And Bill suggested that I show you guys how the Fed has debased the US dollar and how much our purchasing power has dropped ever since the Fed's inception. And it is quite alarming when you take a look at this data. First of all, since the Fed was created in 1913, the US dollar has lost between 97 and 99% of its purchasing power. And this is data right here, you can see on a chart from the Fed. The Fed tracks this data and actually shows you straight to your face that, yeah, you have lost that much purchasing power with no shame. This is just standard operating procedure, okay? This is their data. Basically, what $1 could buy you back in 1913 would cost you about $35 today. And really, it didn't happen overnight. It was a gradual process over the past several decades that was driven by different policy changes, government debt, wars, and most importantly, the abandonment of the gold standard. Take a look at this little chart right here to show you back in 1913, a dollar was worth a dollar, right? And as the years progress, just how much purchasing power gets stripped away. And today, that $1 would only be worth about 3 or 4 cents in today's money. So it's really ridiculous. Now, the initial mission, or at least so they say, of the Federal Reserve was to stabilize the money supply and act as a lender of last resort. And at the time it was created, dollars were still tied to gold and even partially silver. $1 was worth about 1.5 grams of gold. But in 1933, FDR confiscated everybody's gold. And that's one of the biggest arguments I get from people still to this day, saying this is why you shouldn't own gold, because if it happened before, it can happen again. Obviously, the world's a lot different place right now. If they tried to take everybody's gold in 2025, it would be absolute pandemonium. But basically, in 1933, they made it illegal for Americans to own gold, and the US dollar was devalued from $20 an ounce of gold to $35 an ounce. So they basically took everyone's gold and increased the value of it for themselves and basically ripped everybody off. They shortchanged everybody who had to give up their gold. So overnight, the dollar lost 41% of its value in terms of real purchasing power and in terms of gold. How do you like that for the ultimate American ripoff? If you think things are bad now, imagine something like that happening to you. Then fast forward to 1944, we had the Bretton Woods system that was created, which basically pegged all of the global central banks' currencies to the US dollar, and the US dollar was still pegged to gold. So that's when we kind of created the dollar as being the world reserve currency. But then less than 30 years later, President Nixon paused the gold standard and said it was only going to be temporary. The US stopped backing the dollars by gold completely, and the dollar became a fiat currency backed only by faith in the US government, which was probably the largest mistake this country has ever made. And one of the biggest arguments I get from people time and time again of, well, we had to do this because we just needed to have extra money, and there was no way to do it without taking the dollar off the gold standard. But that is just not true, guys, because all you really have to do is value gold where it should be at. So all they really needed to do was they just needed to increase how valuable gold is compared to the US dollar. So if gold needed to be $1,000 an ounce back in 1971, rather than taking it off the gold standard, well, that's what they should have done. But instead, they chose the weasel way out and took it off the gold standard altogether and promised that they would reverse it. And from this point forward, it was really all downhill, guys. There are entire websites out there dedicated to showing you just how much value, purchasing power of the dollar has lost since then, and it just continues to get worse and worse. Inflation becomes normal by the 1980s, and the US debt grew from $900 billion in 1980 and now today to over $38 trillion. It's insane. And that's why everybody, including myself, continues to tell you that we are on an unsustainable path forward. We cannot continue in this direction for very much longer before the entire financial system collapses. Then, of course, in 2008 and 2020, the government thought it was going to be a good idea both times, and not learning from their big mistake in 2008 that quantitative easing was going to be a good idea. And they pretty much took us from a $900 billion balance sheet to over $9 trillion in the span of about 10 years. And that's why gold used to be $20 an ounce in 1913, and today it's over $4,000 an ounce and climbing. Yeah, has it gone down a little bit from 4,300 to around 4,000? Sure, but that's just basically a small blip compared to where it's going to go as inflation continues to rip. And so what this means for you today is that your savings are continually losing value if held in cash year after year, and that's why assets like stocks and gold and Bitcoin tend to rise, because the dollar is falling, and even real estate to some extent, although like I have explained before, real estate's a little bit different because real estate is impacted by inflation, but ultimately the real price of real estate is dictated by what people can afford, not just the rate of inflation.